Hi, everyone. Thank you so much for joining us. My name is Anna, and I am with Epic Events, the organizer of today's blockchain panel and pitch event. Epic is an e-commerce website for frontier technology products and events. Frontier tech includes AR, AI, blockchain, robotics, and other bleeding edge industries. Our mission as Epic Events is to ignite ideas and expose technologies that will underpin future society. Before we dive into our event today, I want to cover our next upcoming events. Our next event is later today. It's the ARCV virtual happy hour, and we've got other happy hours for the rest of the week. So now today's event is the State of Blockchain Industry Investor Panel and Startup Pitches. Amid the coronavirus, we've got the US Congress contemplating a blockchain-based system to allow Senate voting, and the blockchain being touted as a supply chain solution, among other developments. Our blockchain panel of investors and industry experts will discuss how the coronavirus impacts their investing and the overall impact of the outbreak on the future of the blockchain industry. To kick us off, I want to introduce Maya, who is our moderator. Maya Kanehara is a facilitator, executor, and mentor. She is passionate about innovative technologies and services that transform lives. She has over 15 years of experience in product development for tech companies like Twitter, Apple, and Autodesk. Prior to her current role as a managing director at Self-Sovereign Identity Incubator, she was a VP of Growth and Development at Digital Garage US, where she strengthened and maintained a centralized business development process for portfolio companies and corporate partners. Maya mentors early stage startups at 500 Startups, Alchemist Accelerator, and Orange Fab. Let's welcome Maya.
Thank you, Hannah. Thank you, Anna, for the introduction. Very, very excited to be here today. We have amazing speaker, David Lee Sean. To our audience, would you like to introduce yourself, your firm, structure of your fund, any investment thesis, and any past investment that you'd like to highlight? In short, what would you look for? David, would you like to kick off?
Sure. I hope you all excuse my COVID growth here. I normally have much shorter hair. It is what it is. So I am at home. So the Silicon Valley Blockchain Society, we've been around for about 3 years, and we are a global network of investors. We used to have, well, we still have 5 chapters, but we used to have monthly meetings in those chapters, different parts of the world. So there was everywhere from Vancouver to Los Angeles to here, obviously in the Bay Area, San Francisco, Austin, and Zurich, Switzerland. We were in the process of opening chapters in London and a host of other places, but things have changed, as we all know. So we've gone to the virtual. So we just had our first virtual salon last week. And we were very pleased with with the participants. So I think that's obviously how we're going to move forward. So it's a little bit different. So what happens normally is in companies we choose, we have a review committee, and that committee decides what companies will present. And then we would put them on a roadshow, and we have a broker-dealer relationship with another entity. And so that means our members could actually invest directly into the companies. I'd say I've seen tickets as small as 25K and as large as 500K come out of our members. And our thesis is really focused around, I mean, first of all, our mission statement for the organization is just 3 words. It's called Fund the Revolution, hashtag Fund the Revolution. So we've really focused on bringing capital to this, what we believe is a new asset class, especially in the area of crypto, but then also the new technology blockchain. We look at blockchain companies, AI-driven companies, IoT-driven companies, supply chain, logistics, as well as digital health. Those are our primary categories. And we are literally in the process. We've been doing this, like I said, for about 3 years. So there's dozens of companies that our business model is centered around. It's similar to Y Combinator, we end up doing a little bit of investment, we get a piece of the company, and then we put them on the road show. So it's not complicated. We're not asking for cash up front to pay to be on our network or anything like that. We just really want to support this. My background personally, I was an institutional investor for many years. So I used to be chairman of the San Francisco Pension Fund. So we're about a $20 billion fund. So I was in what's called a limited partner or an LP in about 120 funds around the world. So private equity and venture capital. So I kind of know that world pretty well. So I wanted to build an organization that would allow mainstream capital to actually come into this asset class and participate. So I was tired of going to, early on 3 or 4 years ago, I would go to what were called meetups. We call our events salons, but meetups where there would be one ICO trying to raise money from another ICO. And I realized that wasn't what I wanted to be a part of. I actually wanted some adults in the room. So that's what we built, and that's what we do at the Silicon Valley Blockchain Society.
Thank you, David. Lee, would you like to talk about yourself and your firm?
Yeah, thank you. Thank you for having me today. So today, actually, I'm gonna, because it's a little bit confusing that I'm actually working for 2 funds. But in the last year, I probably 80% of my time with Hashkey Capital. So I will be just representing Hashkey today. So the parent company of Hashkey is called Wanxiang Group. So we started to make investment into the blockchain space back in 2015. So we were the first corporate investor of Israel. And also we were the single LP of Fenbushi Capital when we invested like $50 million into it. So in a word, Wanxiang actually deployed over $200 million into over 200 projects up to date. So we have a long history into the space, but we just established our a new brand, which the name is Hashkey Capital back in 2018. So when our fund was incepted, so we are actually a fully regulated VC fund under Type 9 asset management license in Hong Kong. So in Hashkey Capital, we have 2 funds. Fund 1 focused on token investment, and Fund 2 in the equity side. So the total AUM is about $130 million and we've in 2019 we invested into about 25 projects. So when we talk about our thesis and what we were looking for, so we are a little bit different. So we first of all, we invest heavily into the infrastructure side that not limited to the technical infrastructure like public blockchain. So we do invest in Polkadot, Cosmos, like Ethereum, a lot of Nervos also, a lot of very famous public blockchain, but also including digital asset management infrastructure. Like we invested into Tasset, which is used to be named under the name of True Digit. So it offers a lot of trading technologies, technical solutions to exchange. Secondly, what we are looking for is actually the projects can bring in synergies to our current portfolio companies, also to our parent company, because our parent company, Wanxiang Group, it is actually a huge conglomerate. Its main business including manufacturing, which is auto parts, and also agriculture and financial services. So I'll give you an idea of the size of what we were doing is we have about 9,000 employees in United States alone for the manufacturing sectors. So that means we have a huge demand for supply chain finance, and we do hold, we are kind of like a full license holders in the financial sectors back in China. That's including banking, insurance, trust, payment, and I believe is leasing. So we get involved in a lot of financial activities, and our chairman in the Wanxiang blockchain actually believe that blockchain can be innovative solutions for all those sectors. So we are looking for a lot of different verticals, sectors in the blockchain space. Thank you.
Thank you, Lee. Let's go with Sean. Would you like to talk about yourself and your company?
Certainly. My name is Sean Manion, and I am a Chief Scientific Officer for ConsenSys Health. I am actually a neuroscientist by training and spent a long time with the government doing research administration before about 3 years ago moving into the private sector and following, I guess, a blockchain lead that I feel can fix science in a way that we'll get into later. So ConsenSys Health is a very recent spin-off of ConsenSys, which you're probably familiar with. Our CEO, Heather Flannery, had been with them for about 18 months. It wasn't one of their portfolio companies so much as it was an independent, or not independent at that time, but it was one of the circles, health being one of the areas of use case. Heather talked with Joe Lubin, the head of ConsenSys, and really felt that health required a very different approach and a very different look. And so with both them as a parent company and some outside investors in the beginning of March, spun off ConsenSys Health and brought myself and a number of other people on board. You know, we're a new startup ourselves, so we aren't actually doing investment per se, although, you know, of course, we're always interested in investment when the time comes. But we did start in response to the COVID crisis. We put together a hackathon for solutions across an array of different applications in healthcare. And that in and of itself has given us sort of the ability to help a lot of different groups come together, a lot of different solutions to be developed in the time of need and in a way it's going to get noticed. And so we're in the middle of that right now. The teams, I think there's 50 teams, 500 different participants working furiously right now. Some great pitches that we've been seeing every day. The announced winners will be on the 18th of May. We've got Joe Lubin himself and Vitalik Buterin have both signed on to be judges. We've got Brian Bellendorf from Hyperledger as a judge. So we're both looking at a great amount of new information and new tools and new potential companies being built, and at the same time hoping to save people's lives, hoping to save the world from what has become a very unusual crisis. I don't think that makes us an investment company, but the investment in time that we want to put into, I think the top 3 winners are going to get due diligence by us and our partners in order to make sure that there are viable options for any viable products that are created. We've brought in a host of health and life sciences mentors to work with the groups of hackers so that the things that they build will have a little bit of vetting and a little bit of shaping to make them real world ready. Maybe not plug and play enterprise-wide tomorrow, but they're going to be a lot closer to something that a doctor or a nurse might find useful because we put those doctors and nurses in touch with our teams. So with that, I'm looking forward to having a great conversation today, and thanks to Anna and Maya for inviting me.
Thank you, Sean. Yes, I'm very impressed with the solid, matured network in ConsenSys Health. I'm actually a participant. So yeah, moving on to the next question. Obviously, the coronavirus has dramatically changed our lives. For instance, gig workers got hit a lot in this coronavirus pandemic. Uber and Lyft drivers are out of work. Supply chain like Amazon, Walmart, CVS Health are hiring more than 500,000 employees right now. Do you remember your investment thesis and predictions heading into 2020? Where were they? What were your strongest convictions? David, Lee, would you like to start?
Our strongest convictions, I mean, were our verticals. I mean, we really we've always had a role for health and digital health specifically, obviously not molecule. We don't wear white jackets. So we don't have that expertise, but we do have a pretty good idea of analytics and what roles that can be played. Of course, and there's the role of identity and privacy in health. So we've always focused on those because it had such crossover. We have our health lead at SVBS is a woman by the name of Marquessa Finch, and she's comes from public health, and she's been around for a while doing a lot of things to health. She has her own VC fund. So she's focused on that for us. So digital health, in fact, now we focus on health as we do these virtual conferences or virtual salons moving forward, we just had our first one last week, as I mentioned, there's health, wealth, work, and impact. And those are kind of our 4 areas we're going to focus on. And that's just a refinement of what we already were looking at in last year and doing it in person. So we haven't changed. Nothing has, obviously, you know, gosh, now I've been bombarded by companies that are trying to do testing for COVID and other kinds of virus, you know, detection. The whole idea of anonymity, especially since people are now talking about tracking folks because they had what China did, but it looks like, at least the announcement today, I read that both Google, the partnership between Google and Apple, they've decided they're not going to release that kind of data on the individuals, but kind of like a metadata so that people can find, you know where you've been, where there's been a cluster of people that had a lot of COVID or whatnot. But that's just one example. So I don't want to dominate that, but that's my response to you is that it's fundamentally the same. We haven't changed. You know, we're all in this blockchain, AI, we're all doing similar things. So it's not like we were already here doing cutting edge, focusing on innovative technologies, you know, including AR, XR, VR, and a host of other things. So it's now we're a lot more of a spotlight, especially on, the world has caught up to us in the area of privacy, or thinking about the value of privacy, which is what the blockchain represents. And of course, digital and transparency was what the digital ledger represents, and this whole idea of identity, and, you know, decentralized identity did. So we're pretty much still on track for what we already were thinking about.
Thank you, David.
Okay, my answer will be very short. No, our investment thesis is still the same, because I've mentioned, so we are really an ecosystem builder and investors. So we are actively just searching or looking for the missing pieces in the entire ecosystem. So I would say our investment thesis will evolve naturally as the industry change. So it is saying that our investment thesis is more like impact by the change of the market or an industry itself, rather than the COVID impact. So in 2019, we invested heavily in the infrastructure, but as the industry aged or matured, so we moved to the other end, which is more to the projects with a high potential of mass adoption, and and offering solutions for institutional investors and the traditional enterprise to enter into this space.
Thank you, Dee. Sean, since ConsenSys Health is still kind of new, would you like to talk about the process that you went through when you were building the team?
Certainly. Yeah, at the beginning of 2020, I was winding down a bootstrapped company that I had set up and had gotten moving a little bit, but had just been kind of chugging along. And Heather said, "Hey, do you want to come on board with what I'm doing?" And that was a bigger, shinier bus. So I knew it could move faster. So I was getting ready to make that transition. And of course, we launched on March 2nd, and we were going to launch in the healthcare industry. The Health Information Management Systems Society conference is a 40,000 person conference. We had a booth. We were sponsoring a special blockchain day. We were ready to just roll. And of course, they canceled that conference. And I was getting on a plane. I went to Scotland for a conference there, and everything just started changing. I got stuck outside the U.S. when the bans started coming down, and so everything changed very, very drastically. And I think what it did for us was it gave us kind of a laser focus and an acceleration. You know, instead of looking at healthcare broadly, we started looking at things that could be immediately applicable to the COVID crisis, which is a pretty wide array. They'll also have long-term traction even once we're beyond this. And of course, it accelerated it. I think, and there was a question in the chat there, you know, did this move up the pace of investment? Well, obviously, different industries, different areas, different verticals are going to be different. Health, I think, inevitably, the answer is yes, yes, yes. But there's been a pause. There's been a sort of an everyone taking their breath pause, because nobody has quite had a good traction on, is this going to be 1 month, 1 year, forever, what's it going to be? I think you're starting to see people exhale a little bit because it does look like we are going to see something different, but something closer to normal than, you know, widespread apocalypse and zombies wandering the streets. So I think what we're seeing is an acceleration. It's given us even an acceleration. We came out of ConsenSys, which has an amazing ecosystem, and I think healthcare is broad enough you can even develop an ecosystem. But anything like that was probably in our long-term strategy. And now all of a sudden we're having a hackathon where we're looking at different things and saying, hey, is this a group we want to work with? Is this something that we want to do? There's a lot of, we've been going 16-hour days, you know, pretty much around the clock. I'm sure our CEO, I think she's burning, you know, 26-hour days. I don't know how she does it all. But it's been a fascinating time just to see what in health, especially with the privacy protecting aspects of not only blockchain, but other emerging technologies like AI, ML, zero knowledge proof. All of this is coming together at a time when, you know, no one knew we needed it in the bigger, broader world, and now they're calling it and they're wanting it. But not everything is like that. So we're working as quickly as we can.
Thank you, Sean. Sean touched upon a little bit, so it will be overlap. So this is gonna be for Lee and David. With COVID, has your investment thesis changed? Do you see any new industry trends emerging in general? For investors, for founders, operators, what remained the same? David?
I would say, yes, it's changed. Of course, the world has changed. We're very much looking at bigger picture stuff like systems. We're not quite sure where the dust is going to settle on all this. I don't know what percent, there's a significant percentage that wants to rush back to normal, whatever normal was. But a lot of folks, I think normal was not working as efficiently or as effectively as many people had hoped. So I see a lot of people coming up with different alternative ways to deal with a lot of our issues, whether it's climate change, so it's more big social issues. I think, you know, what I believe is going to be at least 10%, if not more, of unemployment in the United States alone. I think we're about to get slammed. And I think that's not easy to come back from. That has in fact never happened for generations since the Depression. So, you know, I may be an older guy, but I didn't live through that. My mother did, and my grandmother, and they told me the stories. So I think we're still in a major adjustment period. We've just been able to sit out for a couple of months, but coming back to the zone, coming back to everything, I think, so I can't answer your question right now. I know right now there is somewhat of an appetite for those people who have capital and some liquidity that they want to, not institutions so much, because they're focusing on their mainstream stuff, but certainly there's some high net worth individuals or people who have capital, some dry powder on the side who still believe in the future and want to, and believe in technology that'll manage that future. And that, I think we're all in that same industry. So I see an adjustment, but I don't see a rush to writing checks.
Yeah.
Yeah. Yeah, I will answer in a more general way because according to some a report, actually some numbers supported by a PwC report, we do see a sharp drop in the deal volumes and values. And especially in the APAC area, because we are Asian fund. In 2019 Q1, there was 60 deals. But this year Q1, there's only 15. Maybe you will be surprised because we are not foreseeing any tremendous market trends, but it's because we are located in China. Our headquarters is in China, so the pandemic timeline is different. So it's a little bit earlier there. So we have seen this trend and the response to it. The investors actually make a response to it. And also, secondly, we see more funding actually goes into the later stage, which is from more. That means like more pre-A, more round A than the seed round. So because that, I think, first of all, it's because the industry is maturing. And secondly, actually, I think that's investors are looking for more certainties into the space.
Thank you, Lee. Let's talk about the current situation in context of the last two recessions back in 2000 and 2008. What did you see happen in the last two recessions to serve as a reference point for what may happen here? What happened the other two times for the industry? What's different? Do you see any similarities? David?
Okay. Credit crunch. I see that's going to be a major issue. I mean, we're talking, this is different. I mean, we're already officially in a recession, at least we're well on our way to a recession, and we're talking depression is not far and is in sight. So we're talking about multiple industries that are crashing, whether it's hospitality, then within that airlines, hotels, all the conference businesses, and then eventually impacting all kinds of transportation. But then also, it's been a little bit of a boon obviously for online services, telecommunications, and some of these kinds of things, like we're using Zoom, which has its own issues. But I don't, like I said, what's different is, I think death. I think the idea of folks facing mortality has gotten people's attention. That's different. It's one thing when things were a financial crisis. It's another thing when it's a health crisis, a global health crisis, which then leads to a financial crisis, because people are still scared. I mean, are people going to be rushing back? I don't see commercial real estate coming back anytime soon. And the WeWorks of the world, are we all rushing to go to a crowded office space? Are we all rushing to get onto a subway when there's no vaccine yet? I mean, there's a lot of issues. So what's different is observing where do we think there will be investment opportunities. I never would have rushed in a financial crisis. I wouldn't have necessarily thought of investing in Zooms and other kinds of streaming media companies, Netflix or whatever. I didn't think people were going to be parked at home. Now they are. So it's really identifying those things where you believe you can invest in a company that will get you a return. And then where are the companies that are blockchain related that can help spearhead that payment systems? Obviously now more than ever, food supply chains. There's a host of areas that I think make relevant, as I said before, identification. There's a host of areas. So that's different. I didn't care about identification in the last recessions, right? So now these are the areas that are new. Everything is new as far as I'm concerned, especially with death.
Thank you, David. Sean, so you are in New York. Would you like to talk about it?
Yes, certainly. And it's a good question, because, I remember 2008, I remember 2000, but I was in grad school in 2000, and, I wasn't making any money as a grad student. I didn't make any money when there was an economic downfall. I just kept working. It was not really something that hit me in a way that I remember and can compare. But in 2008, and I think especially in the blockchain community, I mean, that was an economic downturn that inspired or spawned, the launch of Bitcoin and really everything that's followed since then. And I have to wonder if we don't have some type of frustration with the system or novel solution combined with the frustration with the system. And as David said, this isn't just a banking downturn. This is a health downturn, and people are scared. People are nervous. I'm in the Bronx, which is one of the hardest hit places in the United States, and it's definitely hitting in a way that's got health disparities to it. There are certain communities that are getting hit much harder than others. And I think, both the people in those communities, but also people who care about figuring out what we can do to balance health disparities, are hitting a point of frustration, not unlike people hit with the banks in 2008. So will you see some type of new solution, some type of new idea that could have happened before, but will gain traction with the broader community that can use it. Because really, you can come up with a blockchain solution, but if you don't have a network to use it, it's not going very far. But maybe just like people frustrated with the banking industry in 2008, people frustrated, at least, you know, in this country, because every country is different, but in this country, maybe people frustrated with the healthcare system, with the ability to even gain access to those things, will attach themselves and will move towards some new solution that'll look like, you know, what Bitcoin did for banking. That's going to come out of this current crisis. And I wonder if that's not going to be the case.
Very interesting. Thank you, Sean. Lee, would you like to add anything?
Yeah, I totally agree with what David and Sean said. Just adding a little bit of my ideas is I think in the previous two recessions, those actually hit a certain or specific industry more heavily, like 2000 internet bubble, and the 2008 is more about real estate and financial sectors. But this time it's a global pandemic. It do have impact in every aspect of our life and all the industries. But at the same time, I believe it brings some new opportunities, because people's behavior was actually is changed permanently. And I believe this this change will actually outlast this pandemic. So you will see more activities will be moved to online. And also at the same time, I think in China, the government wanted to speed up what is so-called new infrastructure constructions. So all of this means an accelerated transformation to the digital world. So that means tons of data will be generated, more and more data will be generated. And blockchain actually is a very powerful tool to help to determine and define the ownership of the data, and also facilitate the trustless transaction of the data. So so to give us a little bit confidence, I believe probably a blockchain industry or space will actually benefit from this pandemic in the long run.
Great, thank you, Lee. That leads to the next question. I'm been dying to hear this. Are there any sectors or area of the blockchain industry that are doing well? What do you think about the innovation around the blockchain since COVID-19 pandemic? If you have any specific company you have seen, maybe you can mention, or anything else you've seen. David?
I think I've kind of touched on them already. I see specifically we're working with a company called Apotheca that is focusing on data analytics around for the healthcare industry. I mean, we all know that HIPAA is a challenge, but I think especially the world has changed. So especially under this current administration, I think there's going to be, just like with relaxing rules around the FDA and drug pipelines and vaccine or whatever treatment pipelines being relaxed, those rules and regs. I think the same thing is going to happen in other areas. And including, I don't know if how HIPAA will be strengthened, certainly will be strengthened under this administration. It may be weakened. So a lot more companies will be able to do a lot more, which means, but ultimately that means our data is not going to be protected. And there'll be plenty of companies out there trying to make money off our data, and we don't even know who they are. So that's hence why we liked Apotheca, because it was built on a blockchain and therefore leaving transparency, allowing you to select what data could be shared outside, or at least being notified, and you have a choice before it gets out.
Yeah, because I think we may have a technical issue. Maybe we should move to another speaker. You mean, oh, there we go. We have you back. Great.
Oh, I was out. I'm sorry. I was unstable. For how many seconds? 10 seconds, 20 seconds?
Yeah.
Okay, bottom line. So all I would say is I mentioned the company Apotheca, and I think with rules and regs, maybe even lessened, I think that blockchain will play. There's some companies out there doing stuff. I'm just still concerned about privacy and the lack thereof and the assault on privacy, in my opinion.
Great, thank you, David. Sean, I know you are in the middle of a hackathon, but can you talk about something?
Yeah, I think health is not only where I am, but what we're all concerned about, and I think that's where especially in the blockchain community, you're going to see a lot of rapid movement forward. Health has lagged a little bit behind, not only fintech but things like supply chain. But there's overlap with different applications of fintech-like applications in healthcare, of supply chain-like applications in healthcare. But then there's a variety of deeper and more complex areas that are very, very challenged in healthcare. And I think that's where everyone's looking, and we're seeing that. That's one of the reasons we're having the hackathon. That's one of the reasons we're getting large and small corporations saying, hey, we want to be part of this in some way. We've gotten health experts and community experts to come in and volunteer their time to mentor, which has been great, because I think everyone both looks at it from an investment standpoint, but also from a human investment standpoint, as we've got these tools and they've been around and we've been tinkering with them in healthcare, but nobody had advanced very quickly. And as our chief medical officer at ConsenSys Health, Alex Kahana, says, he's been talking about this for 3 or 4 years. And now all of a sudden, all the people who either weren't listening or smiling and nodding are calling him up and saying, wait, that stuff you've been talking about, there's privacy preserving aspects that you can layer into this. There are ways that we can share data. And even if you bring in some of the AI/ML and federated learning and federated analytics, you can start to touch multiple sets of data without moving that data around, thereby making a lot of the regulatory challenges irrelevant. That's what people want to know about. And I don't think we're, boom, we've taken off, but I see a lot of movement. I see a lot of noise. I see a lot of chatter from big business, from small business, from investment, and especially from government, which doesn't always, win the day from an innovation standpoint. But if they're interested, it's going to drive things in a different way than if they weren't. And that I think is going to be launching health, especially in the blockchain community, forward very quickly in the next 12, 18, 24 months.
Thank you, Sean. Yes, I agree with you. And especially around the government, it's very interesting. Like I've been approached from some of the governmental organizations as well. Lee, would you like to add something?
Yeah, I think I do see a lot certain sectors or areas showing a lot of activities right now, but I'm not sure it's COVID relevant. So what I've seen is actually the payment sector is extremely active right now. So from different levels. So from top, there is government projects like all the central bank digital currency projects, especially in China. So our digital RMB, DCEP is currently under testing. That's a big thing in China. And also in the business sectors, like more private sectors, you will see large consortium payment solution like Facebook, Libra, JP Morgan's in. So there's, you will see more and more business actually join into this cross-border payment sectors. And also, of course, in the blockchain ecosystem, naturally, you will see more matured projects like Ripple and Stellar-based payment solutions, which is already shows, which already produce like in production projects and creating values in the real world. And of course, not mentioned a lot of like a number of crypto payment solutions. So we see this payment sectors very active at the moment. And in terms of areas, I think recently emerging markets has shown a lot of potentials. So like Southeast Asia and India. That's very interesting actually for the investors, as one thing is the valuation of the project from that area is relatively low. I will not say low, but reasonable. And of course, that's the area actually, lacked a lot of infrastructures, especially like banking infrastructures. So you will see a lot of payment projects actually happens in that area. It is, to me, it is rather easier to build something new than, you have to make modification to the legacy system. So it's very troublesome, a lot of interest involved. So we as an investor, Hashkey, actually, we invested into 2 projects. One is LightNet, which is a Stella-based cross-border payment system targeting small and medium enterprise in the Southeast Asia, and also a on-ramp, off-ramp peer-to-peer solutions, which is called Zempool. So that's what we've seen, which is the active part into the space.
Thank you, Lee. We have a few more minutes left. I'd like to move on to a few more questions. Will blockchain startups be able to close funding now and in the near future? On the on the investor side, what is everyone doing in the present, next 6 months and beyond? David?
The next 6 months and beyond, there'll be very slow movement in my world. I think people are excited. I mean, there's still innovation, right? And this has done nothing but spark more innovation. But I'm not, just because someone has ideas doesn't mean they're good or that that's where resources should go. I mean, I certainly don't think that there'll be any new dating apps anytime soon, thank God. I think most people are driven now to finally do innovation around healthcare significantly. And yes, payment systems, which is financial services, and how to make that more, and very much consumer facing. I think robotics will be huge because corporations are seeing how they may not need as many humans as they thought they did. And certainly the humans can stay at home for what they do need them to do and not be in an office where they're spending millions and millions of dollars a year to rent space or build a fancy office building or lease one. I think we're in a massive disruption here for the rest of this decade. And I don't believe any one of us knows exactly what the scope of that is. And I don't know anyone does. I just don't believe it. I don't care how much data. I mean, the wealthier you are, the more data you pay for and you get access to. So whether you're Sam Zell or Bill Gates or Michael Bloomberg or whomever, you're getting a lot of great data, but you still don't know where to put your money. I mean, Warren Buffett is sitting on $150 billion in cash. He's not swooping in just because the prices went down in the market. Because he doesn't know. He must rather sit on his cash. So for us, we are continuing to educate our members. We think it's important to feature and showcase those companies that go through our process. And we think that there are opportunities out there. I'm just not seeing them generating revenue for quite some time. So that means they have to really be well financed. They do need probably a Series A and not just $1 million from friends and family. And strategic partners who can help distribute them as widely and as broadly as possible globally so that they can rely on multiple potential revenue streams. So that's what the companies we're looking at, and for the rest of this year, at any time, but especially now, and also those specific categories that have already been mentioned today, those verticals, and not just anything, but that somebody has an idea for that they think should be on the blockchain. It's like that's out the window.
Thank you, David. Sean, what do you think?
Well, I think, what I was saying earlier is, you have this collective breadth, and David is, I think, saying a lot of that too, that no one's just writing out checks and handing them out because they don't know what's going to happen. You're starting to see, at least in some sectors like health, a little bit of exhalation because that people at least know that something is going to be needed. One area I'm passionate about as a scientist, and I just actually, I published a book with a journalist called Blockchain for Medical Research, Accelerating Trust in Healthcare from CRC Press. Of course, it launched while this happened. I don't even have a physical copy of this book yet because they shut down the facility that was making them. But I think medical research, it was one of those things where we were writing the book last year. I'm passionate about it. People I know who know research were passionate. Hey, this could be used to speed up research. You take the average person and they don't know or care that research takes a long time. All of a sudden, everyone wants a vaccine. And it's like, whoa, what do you mean it's going to take 2 years to get us a vaccine? Well, that's fast. You can't do research boom because it's not only the regulatory aspects, it's the way science works, it's getting independent details being sure at a high enough level. Even with the testing, that everyone wants testing and we roll out a bunch of tests, but these are uneven. The way they're determined to be valid or the reliability hasn't been fully vetted for all of them. And so you have all of a sudden an interest in science and in research and health. And I think that's something that people are starting to say, there's a lot of areas that could be improved. And so it really is not a high bar to see those different groups and those different companies that are trying to improve that in very clear ways. I think it gets a little harder when you're investing in specific types of this vaccine or this pharma solution. I think that's traditionally been, a standard, and that's where people are holding back a little bit. But I think the system solutions, I think those are going to be more easy for people to spend their money investing on in the next 6 to 12 months, while they're still relaxing a little bit about what to do about specific solutions. And then, of course, as new things come back online, you're going to see changes in how supply chain works. I think there was a question about, what's going to happen with global supply chains after this. They're going to change, but we don't know how yet. So I think system solutions are going to be where people are going to be investing, and blockchain plays a heavy role no matter what the sector in that. So I think you're going to start to see health first, and then other sectors, especially for emerging tech like blockchain, start to loosen up before investment in other realms.
Thank you, Sean. Lee?
I would say most of the, I think, top projects still got closed their fundings pretty smoothly, but the rest of the startups will probably have a struggling time to raise funds. But I wanted to deliver more positive messages to you all, because I have numbers to back it. HashKey actually, we closed 6 deals in Q1 alone. So investors are still making investment, but in reduced check size, and we are trying to slow down a little bit, because what we are also looking for is certainties. And I think David and Sean both covered pretty well in the industry side. I will talk about the investor side. So HashKey, actually, we always operate in a very distributed way. We have office in Shanghai, Hong Kong, and Bay Area. So the COVID actually doesn't impact us a lot. So nothing has changed suddenly or really dramatically from our side. So we are still reaching out to good projects, promising projects, very, very actively.
Thank you so much, Dee. So we are running out of time, but can we have the question from audience? Anna, is that okay?
Yeah, I think we see 2 questions right now. If you guys have other questions, you can raise your hand or type it into the chat. Okay, so here's a question from B. What steps do you take to minimize the selection-related bias in preferring the more proven teams and concepts? Sometimes what we need most are reflected in many ideas and early stage work that is missed by popular discovery trends. The math supporting this is clear and not new. Anyone want to respond?
I can
yeah, go ahead. No, please go for it.
Okay, I think in selection bias, and that speaks to me, from a cognitive science perspective. It happens in everything we do, and so the way you balance against that is sort of an interdisciplinary thinking. What we've done with the hackathon in trying to select winning candidates for products that have been produced for healthcare is we brought together those healthcare experts along with those technical experts, because just a technical solution may or may not work And so that bias selection from that side is one thing, but a healthcare solution may be selected and doesn't have any technical viability to it. So I think bringing those interdisciplinary views and perspectives together, and that can come in a lot of different ways, I think that's valuable for eliminating that selection bias that can happen. And for me, I think back to Theranos, which people were probably familiar with,
Wow.
$1 company that was selling garbage science. Walgreens, which had invested in that, actually sent a scientist out there for a 5-day trip. That individual came back 2 days later and was like, no, that's garbage, don't touch it. And they were like, we put a lot of money in. They couldn't have scammed us that much. And of course they did. I forget his name, but the whistleblower just wrote a Medium piece the other day saying that we are ripe for that type of exploitation or mistake or selection bias right now. And I think making sure you have the subject matter experts with the technical experts and of course the business experts really coming together to agree upon something is the way to eliminate that bias and make safe choices.
That just happened this week, right? With this state of California just wrote a check for $500 million to a company that made N95 masks. And it turns out the company had all these issues, so they had to cancel the check. And that just happened where people are rushing to do things and think that's a great idea, or the right people made the right people made the introduction, and so the deal went down. Fortunately, that one was stopped. It happens in every level of business and science.
Wow. All right, guys, I'm going to move on to the next question. So one more question before we move on to the pitch. How can blockchain help push digital health forward under COVID-19? For example, medical data privacy and what else? I think this is a very broad question, but go ahead, guys.
Okay, I think that question is more related to Sean, but I will just adding a little bit more information because that's what we were doing in our company. So our parent company actually has a blockchain labs, which has about 300 developers doing there for the enterprise solution, which is more consortium blockchain or permissioned blockchain. So they actually develop a solutions for tracking the funds for COVID donations under the entity of Wanxiang Trust. So that's actually, I think it's a very bravery move into this pandemic.
Is it a website, or do you mind sharing it to the rest of us?
I don't have a website. I'm not sure. I will try to find some news, a link to it later.
Great, thanks. David or Sean, want to take a crack at that question?
I'll let Sean go for that.
And I think it's an array. Healthcare is a kind of a microcosm of everything. There are solutions that are finance. There are solutions that are supply chain. I think those are gaining traction very, very quickly. I think the solutions that really touch on healthcare records, research, those are going to take a little longer and to work into the system. But I think the impact of COVID is more broad than health. And if you look at David mentioned earlier, we're probably going to see 10% plus unemployment. It's close to 20 now, but it'll stable out and it could be to 10% for a long time. Anything that's business solution, anything that's jobs related, anything that's economic related is going to come back and reduce the secondary effects of mental health issues, depression driven by economic disparity. So I think in some ways, you can improve health post-COVID by improving economic solutions, and that can come from almost anywhere.
All right, thanks, Sean, and thanks to you, David and Lee as well, and Maya. We will move now to the pitch portion. So let's see here. I will share the screen. Just wanted to go through the format really quickly for those of you in the audience who's joining us for the first time. So today, each startup will have 10 minutes, 4 minutes to give their presentation, 3 minutes for Q&A from the judges, and if we have extra time, we will open up to the audience, and 3 minutes for judges to give feedback. All right, so first up, we have John Black of XPID. Let me find him.
Hi there, everybody. Can you hear me?
Yep.
Great. So let's go ahead and, my name is John Black again. I am the CEO and founder of XPID. Let me just get the screen share going. And is everybody good with the screen share?
Yes.
All right, so again, my name is John Black. I'm the CEO and founder of XPID. And the reason I started XPID is because I, as a consumer, am a member of many loyalty programs, as probably you are as well. And I'm just tired of my identity and just data being taken advantage of. And so, nonetheless, I've been in enterprise feedback and customer feedback industry since 2011. I also have a BA in hotel restaurant administration and a master's in science and financial economics. And I just felt that surveillance capitalism and my data being taken advantage of was just really just bothered me. And I just felt enterprise feedback could be done a lot better. And so I created XPID, which is essentially helping companies optimize their loyalty programs using a decentralized ledger. And some of the problems that I saw in the industry was that as a loyalty program member, those points always break, they expire, and it wasn't an asset to me. It wasn't adding value to me. But to those enterprises who I actually helped predict loyalty for years, it was a liability, an expensive liability on their balance sheet. And it was also, I just felt the enterprise feedback industry was just running poorly as far as mobile feedback was concerned. And I was just one of those people that was just one of the $360 billion in sleeping loyalty points out there that was just broken and fragmented. And then came along blockchain. And so that's why I created XPID, to put all loyalty programs on a ledger, creating a service for enterprise. Enterprises would float that economy by buying in with smart contracts for that enterprise feedback. They would optimize their loyalty programs through analytics dashboards. And additionally, they would give back the independence of that data and that ID to their customers as an asset through sovereign identity and verified credentials. The team that's been working on this has been working on it for the last 2 years, mostly a husband and wife team in London, also, and some mobile developers in Pakistan and India. All have 10+ years of experience building web and mobile applications. I feel like this is a 10 million revenue generator in 3 years' time, possibly 25 million in 5 years' time. And what we're going to do is have an enterprise subscription model where enterprises buy in, float the economy for that enterprise feedback, but also for those analytic dashboards. And in a sense, they are floating that loyalty economy, which is they are doing now, but now securely on a blockchain. The go-to-market strategy, essentially, we have 5 to 10 warm clients introductions in the pipeline right now, where we're tackling the retail, hospitality, travel, restaurant spaces for those loyalty programs, getting them on the chain, and giving them those analytics and those dashboards. Equally, we have a mobile app that's live on the App Store today, a consumer-facing XPID mobile app, which essentially allows you to, just like Yelp or Foursquare, go to your experience, fill out a review, and get incentivized for that. And so we also have a white paper waiting in the wings for tokenization to essentially just create this economy through incentives and incentivizing customers. We feel we're tackling a 25 billion digital ID space, but also we're tackling those 360 billion in sleeping loyalty points across the 10,000 loyalty programs in the globe. McKinsey already predicts that 3 to 13% of your GDP by country would be opened up if you take advantage of a secure ledger identity management. We feel our competitors are with the likes of Facebook, Libra, and Square. They're just not kind of getting their stuff together right now. A Ward wallet is very similar, where they're consolidating loyalty programs onto one wallet, but it's just not a blockchain. Loyal, Kiwi, and KeoCoin are all blockchain competitors, but they're just doing it in a little different way as far as incentives and customer feedback. What we're looking for today is about 250K to 500K for a startup angel to lead the pre-seed round of 1.2 to 1.6 million, to hire the 3 to 5 developers we're looking for, to build out the enterprise UI, the ledger technology, and build out the mobile app, and just of course increase advertising for both the consumer side and the enterprise side. And with that, I'll take your questions. Thank you for listening to me today.
All right, judges, questions.
Okay, so who are your customers?
So the customers, we are an enterprise analytics software providing ledger services to enterprise anybody who has a loyalty program and needs it optimized. They need to eliminate that liability and essentially just optimize them and improve engagement for their customers.
I have one question. I think for me as a consumer, those loyalty points actually have more values if I can have much more like use case. I don't feel like flying with certain airline a day,
Exactly.
but I would like to go to the restaurant. So, and the true beauty of blockchain is really, the ability to help to solve the trust issue in complicated network. So
Exactly.
is your platform ready to facilitate the interaction among different programs of your clients?
It's a great question. Yeah, and it's a great question, and that's the struggle that I've had on the go-to-market strategy, whether it's enterprise versus consumer. That's why the app went first in the App Store, to hopefully bring in that traction of consumers. And in our next mobile release, we're going to release a functionality that will hopefully allow you to sign up and just tell us who your loyalty programs are, so that we can work for you to consolidate all that loyalty into one wallet. And then we can go back to the enterprise and just say, hey, your customers are talking to you. They want manageability. They want independence with those points. They want to be able to convert them into digital currencies if they want to. They want to be able to get in an Uber and use them rather than just use United Airlines points. And so airlines and hotels are already kind of doing these partnerships with Visa and the like, and payments plans, but we feel that we could provide that opportunity for enterprise to have that functionality to create those partnerships as well. And even open the possibility of calls and puts on the amount of loyalty and the actual transaction value of that loyalty point, which is what enterprises truly want to get at, and set the price for those loyalty points.
And that's part of my question. I mean, it's already means Loyal already kind of does this, or is attempting to do this. Why? What is the need for blockchain here? I'm not clear.
Yeah.
Well, essentially right now, every loyalty program out there is essentially putting a value to points. They've created an imaginary money as it is. What we believe this could help is it solidifies the security on the blockchain. It makes it trustless. It now puts, using sovereign identity, we can now have United Airlines verify the credentials that you're a United Airlines member. And now that becomes an asset in your wallet. And it's no longer United Airlines liability. It's now your asset. And so we feel only blockchain allows that to happen. And then the prospect of tokenization only creates that economy anyway. It is now an exchangeable, interoperable currency that can be used across currencies.
Right, and I definitely agree that tokenization can be used in loyalty programs. It's one of the ideal use cases for
And I have a white paper waiting in the wings. It's just a bit early.
Can I just ask one more? I'm still, this is, opportunity, but how is this different from, one of the questions we always ask is, how does this move humanity forward?
Well, I think the premise behind sovereign identity is that we can move beyond the Facebooks and the Googles of surveillance capitalism, and we can finally just take back control of our identity, or that one loyalty aspect of our identity, and make it yours. And using, of course, associating with sovereign.org or Hyperledger Indy or just associating it with that, we can move this community forward and create that identity ecosystem that over here you might have your payments ecosystem, but here is your loyalty ecosystem, and equally it is an economy, is because it already is established, but it's just not secure on a chain as it stands today. I don't know if I answered your question well enough, David, but
yeah, I mean, your argument is that you're pushing for, you're fighting against the surveillance identity or surveillance economy, or the existing surveillance paradigm that's going to get bigger and bigger. And
the argument could be made that enterprises could finally eliminate that liability, and in return, because of sovereign ID and putting the points into someone's private wallet, it now becomes their asset. And they've washed their hands of it, and now I can use those points somewhere else. And they've done good.
Enterprise liability. Okay, thank you.
And they've done good.
All right, guys, we are running short on time today. So Sean, did you have anything to add to a question? And actually, I think we're going to move into feedback. So if you want to combine those two, that would be ideal.
Perfect. And what I guess my question, feedback, and you can take it with you or answer briefly now, is a lot of the industries you're looking at, retail and restaurants and fitness, are undergoing a major shift in how they're going to do business, and we have no idea what that looks like. Tying in with some of the things David was mentioning about more surveillance and about some of the discussions going on about self-sovereign identity in the sense of tracking individuals from a health perspective. Is there a way to look at that and tie that in? Are there incentivization layers that you could do with loyalty points so that people will give the details of their health over to a restaurant, so the restaurant can say 94% of the people in here have verified that they are clean from an antibody test perspective? Is there a way of tying the new reality into what you're looking at with that self-sovereign identity as the bridge?
Well, again, self-sovereign identity is established by what is written in the verifiable credentials. So if I'm a restaurant, I'm only going to want certain pieces of information, and likewise as a consumer, I'm only going to want to share the amount of data with them also. So it would all depend on how the contract or the credential is written. But again, being as agnostic as possible, we do want to just say this is one aspect of your identity, that loyalty part. And we're just trying to be that one part of your identity.
Okay, David and Lee, do you guys want to give your feedback?
I'll let Lee go.
Yeah, okay. So I think I saw you project a 400K or probably a run rate this year. So I don't know where you are at the moment, but I would suggest you probably need to nail more deals, maybe in a more flexible way, rather than targeting one certain large enterprise. And maybe think about small or medium, business, which is you trying to, onboard more programs onto your network and then create a network effect to get advantage.
Okay.
David?
I think this was, whatever the structure is, it was intentionally brief. So I'm fine with what was presented. I don't really have any feedback. It was clear. I guess my question leads to maybe a slide that could have been, or some reference to explaining exactly why a blockchain and how does that, and what you're challenging and why you see this as valid and value. So there's a value beyond just, yes, you'll get a return. You invest in my company, I'll get your return because we're building this as our revenue sources. You built it around your revenue model is around service for loyalty program. So you want monthly recurring fees from clients, from enterprise organization.
Correct, and that's just the start, yeah.
Yeah, okay. So that's kind of clear. Use of, it's not a SaaS, it's an SLP service, right? So fine. I've never heard of that before, but that's okay. But again, I would just added something to why this is such a great value and so revolutionizing, and why blockchain is important. Just some kind of reference, doesn't have to be a big deal.
Okay.
that
Great.
would.
All right. Okay. So moving to our next startup, we've got Vic Motker. Hold on. Let's see. Let's add him. Okay. Vic. There you go. Yeah, you're still muted. Do we have Isaac?
I think it's Steve.
Oh,
Steve
sorry.
Lamata.
Okay. Yeah, okay, my bad.
Could you also?
I actually cannot access my notes right now.
Okay.
All right, there you go.
I think Steve's going to be presenting today. Hi, everybody. My name is Vic. We're based off in Dallas, Texas.
And Steve, you're currently muted, so can you please unmute yourself and share your screen?
Okay. Can everybody hear me all right?
Yes.
Great. Very good. So we're ready to get started?
Yep.
All righty, very good. Well, thank you all. Vic and I, my name is Steve Lamata, by the way, again. I'm an advisor on the SnapX platform.
Steve, did you want to put your deck on presentation mode?
Oh, sure. Yeah, thank you.
Yeah, thanks.
Okay, there we go. Yeah, so my name is Steve Lamata. I'm an advisor with the SnapX platform team, and Vic Motkor, who's with us, is the managing director and founder. We do appreciate the opportunity to present to you all as the state of the blockchain investor panelists and doing our pitch. SnapX platform is a next-gen verification talent marketplace. And we'll be leveraging AI, machine learning, and blockchain technologies. Our target customers are job seekers and hiring employers. So, with the job seekers, you can see here, we'll be speaking to both of these a little bit further too into this, but on the job seekers, you can see where there's just unimaginable number of unemployment claims, and this is going to move the entire marketplace once employers start hiring again to an employer-driven marketplace. It's just kind of flip-flop now. So it'll be interesting to see how all that transitions, but we feel we're in a very unique position right now. SnapX certification for job seekers is a very simple process, but they basically, we're trying to we want job seekers who want to verify their credentials in order to get to the head of the line and make it a faster hiring decision on behalf of the job employers. So the COVID impact is probably going to have an enhanced value now. It's created some multiple for us because it's going to be some competitive. We didn't plan it, but that's the way it's going to happen. So it just happens to be that way. So how does it work for the job seeker? It's a very simple registration process. They initiate the SnapX certification. They select the areas to be verified, and then they go through a pay swipe, and then within about 5 days they'll have their verified credentials affirmed to them. And what's really unique about this too is that it is self-authorized. So when a job seeker has and brings this self-authorized credential to the employer, it's going to create a lot more value. This is, the benefits of applying with SnapX is a self-sovereign identity adherence and a secure applies, and it's very quicker on board. This is a sampling of what it might look like on the mobile device. So SnapX for the employers. So we're creating a verified marketplace. And if you think about this, 85% of resumes out there have falsehoods. So this is actually what stimulated the thought process behind Vic when he was running an event in Dallas, as a matter of fact, a few years ago. And the employers were complaining about having to go through this process over and over again because when they get to the background check, point, people were failing. So, or they, at some subsequent point in their employment, things would be found out, especially if they're technically oriented developers and they didn't have specific skills or certifications that they represented on their resume. So it's, this verified marketplace, it's a crossover to the gig economy. So the gig workers will be in there. Vendors, employers can bring their vendors into this network as well. And so it'll be condensed into job seekers, hiring employers, as well as the vendors, who are both the middlemen, middlewomen taking place in this process. Self-sovereign identity, the credentials are in the hands of the individuals. I already mentioned that briefly. It's intended to initiate a very safe way to apply, and the data integrity will be preserved. And from a product and financial, we're charging $149 per year for an individual. So, if you think about any one of these multiple media apps that are, $10, $15 a month, this is $12 a month approximately for people, and they can get their updated credentials, twice throughout the year. And once their SnapX, the SnapX Connect is going to be for the employers, and that'll be $1,200 per year. And what we're looking for, we're seeking $250 for a 5% equity stake. We've raised about $50K so far in our seed round. We won a $100,000 grant this year. We've got the first half of that now, and the balance will be forthcoming at the end of the year. We've created a SnapX certification system, and the SnapX Connect and the mobile app has been released. So we'll be using funds for adding more development team, building our sales and account team out, and for advertising. And these are some of the partnerships. So we've got a job portal, applicant tracking systems, vendor management system organizations, and then of course the background check companies are critical to us, and we've got those established now too. From a go-to-market perspective, the heavier emphasis will be on this referral incentives to our partners, because when you've got job portals with millions of jobs that are being listed, and they got the SnapX apply in there, we don't need much of an adoption rate for that to equal quite a bit of income. We'll be hosting booths and job fairs, advertising on social media, as well as having some dedicated personnel as well, of course, as a go-to-market. And there are other advisors besides myself that are blockchain experts or involved in marketing and HR, and certainly legal and an SEC attorney. And that's it. I just wanted to hope that we got through that quickly enough for you, and we appreciate the hosting and prepare to take on some questions between Vic and myself.
All right, thanks. Judges? David or Lee?
Yeah, I have a quick questions. I think you will probably get it frequently. So I think for myself, so LinkedIn is also a good source, which is probably you see it as a invalidated resume source or professional history, record. But I think LinkedIn somehow they are leveraging some kind of social check to offer a validated, a professional profile. So in your platform, so what's the different, practice you are using to validate all those information like past experience, academic experience, and a background check. So what's the difference you bring into this industry that's actually different from the traditional way to do it?
So I can go take this question.
Mm-hmm.
So, Haley. So, bigger companies like LinkedIn or Indeed, or as a matter of fact, ZipRecruiter, they're all within a grind to get the marketplace. And when it comes to the difference between what LinkedIn is doing as opposed to what we're doing is, we're actually doing a 10-point background check. This is the same background check that any employer would request for when they're about to hire or give an opportunity to a prospect, as opposed to a social check, which can be done if I create another account and float another picture, if possible. What we're trying to get to is a mid-market opportunity, not necessarily we want to compete with LinkedIn or ZipRecruiter. But the mid-market opportunity that we identified is with staffing companies. And most of these staffing companies, what they do is they have people sitting on bench, and these are developers, or this could be people that are ready to be deployed. This mid-market opportunity comes in where the middlemen try to fake the credentials of people, and we just took that as an opportunity, as a stepping, as a step, and then tried to build a network around it. To be more, to kind of summarize the entire, we're working to create a network between the hiring employer, the vendor, and the candidate.
And all have verified credentials.
We're running short on time. David, did you have questions?
No, not really. I get it. It's not very complicated. I was going to ask about LinkedIn, of course, and the big boys, but you're saying you're doing the mid-market opportunity. Okay. What do you project your burn rate to be, your cost? How do you plan? You said this 10-point verification process. How much is that? Is that automated, not automated at all? How many people do you need? How does that work?
So we have partnered with a couple background check companies, and these are the same background check companies that are NABS accredited. So NABS is a national organization that kind of evaluates an organization to be a good source of authority of handling credentials. Ideally, we created software which will provide as arms for existing background check companies, and created a new revenue stream for them, which is a consumer side, because most of the background check companies, what they have is an existing revenue stream with employers. But what we are opening up is a new revenue stream for them with direct consumers, where they create their own background check and run their own self-authorized background check. So this kind of created partnerships faster for us.
And you said you've partnered, so is that automated? And you didn't answer the question about how many bodies do you need and to do what exactly, just briefly.
Well, for us to be able to start processing, we created the portal. The portal automatically ships the profile to a background check company that's willing to do the background check. And they will from there take the lead and work with the employee or the individual. And they do it takes about 5 days to get background check done. And once they are done with that, we get the stats back stating that this person has been verified. So based on the credentials that are already there on the resume, we create a verified credential, and we do notary. That's where we're kind of using blockchain for attestations.
Oh, really? Okay. And do you think that, who's the primary user? What industry? Is it mostly engineers? Is it?
I would say it can span a variety of industries. It's all about, I would focus primarily on high-paying people that are getting paid pretty high, because those are the people that can spend pretty high to kind of get ahead of the line. So I would start with IT, but then there's also reason for, let's say if I want to get somebody hired at Starbucks, right? So I don't want to be looking for a long time. I just need somebody that's already has a certain experience validated, and it's a no-brainer for them to start working at Starbucks. Just to orientation. So quick hires can also work faster.
And do you have an international vision?
Our partners do. It's probably going to cost a little bit extra to get that checked. But in totality, when you look at it, you're spending $150 for 1 year, and we give you two background checks on yourself. So that covers the entire year. And it costs us about 50% of that. So the profit that we make is about 50, miscellaneous stuff, even if you take out 20%. So that's still, we're up 30% in profits.
I'm okay. I just don't see, I'm not clear on the role or value of a blockchain in this. But I mean, it sounds like a nice little business. How, and it could scale and it could get bigger, and someone else could buy you. So I see potential exit, but
That's that's actually been our strategy, David, in regards to getting acquired, because we don't intend to become LinkedIn. But if LinkedIn wants to acquire us and they don't want to take a risk in the existing, there's other FCRA compliance requirements that you need to be in line with. So a really good strategic partner who is looking for investing into what we're doing are existing background check companies, because we're creating a new revenue stream for them.
okay, I have a lot more questions, but never mind.
Yeah. Oh, I think, and you guys are totally welcome to take it offline. Yeah. So that was actually the timer for the feedback portion. Lee and Sean, do you want to, and actually David also, if you had just a 1-sentence feedback thing, do you want to do that now?
No, because I took Sean's time.
Okay.
That's okay. You are more seasoned at what these folks need to focus on. But I would point you towards what's called professional credentialing exchange, or ProCredX, and along with a group called Hashed Health, produce something like this for healthcare, which has a very difficult 3 to 6 month process for credentialing, drawing from 17 different sources. And they set up a blockchain system that would allow proof of the provenance of the data that was being pulled in, and set up a marketplace exchange that is now very needed because people can't move state to state if you're a nurse without it. So I would take a look at what they're doing in healthcare. It's different in every industry, and maybe the bar is lower, it's less mature, but you could learn from that.
Sure.
Great, thank you.
Thank you.
My feedback will be very short. It's just, I think that's the question I also wanted to ask. What's really the differentiator of your projects from all those existed projects? Because that's also a big part in the blockchain industry, like projects like Spring Roll, and also one project I've been invested in, which is Hub Token. They've pivoted into kind of professional network already, but you really need to think about it. So what differentiate you from all other projects, and do you target any specific populations or different employers?
Sure.
And you did not answer my question. I asked you how many bodies do you need, and what kind of scale, but that's okay. Thank you.
Maybe I can be offline if that's okay.
Yep.
Awesome. Okay, we're going to move on to our next startup.
All right. Thank you, guys.
Thank you very much. Appreciate it.
Thank you.
All right, so next we've got Igor Kamel with BankX. Let me add him.
Hello.
Yeah, hi.
Hi.
Do you want to share your screen?
Yeah, sure.
Okay.
Okay. Everything is okay, huh?
Yeah, awesome.
Okay. Yeah, so nice to meet you. My name is Igor Kamel. I'm a CEO and founder of BankX. So BankX has a long story. We are building digital asset bank. We got this name because historically a big part of our team is ex-bankers. And we decided to build a digital bank for the digital assets. I myself graduated from Stanford Business School. I worked for McKinsey and Company back in Moscow. I'm Ukrainian. Then I worked here in Citadel in Chicago. I ran innovation lab for Sberbank, the biggest bank in Eastern Europe, and then back to US. So my partners, we have a presence in Asia, in Hong Kong particularly, and have a lot of business in Asia. So we're advised by Jim Bickle, who is here in Redwood City. So we have a long story of our innovations and what we did. So we started back 2017, and We started as a bank as a service platform and built on blockchain as API for banks. At that time, we did initial coin offering, and we did this right. We did this non-US. Top 20 in the world. We were supported by Vitalik Buterin. You see this on the photo. We are officially advised by ConsenSys, by the way, balance-free team for accounting. And we were also supported by Mike Novograd's team in New York. So in 2018, we developed what is called security token framework and proof of asset protocol for audit of behind asset-backed securities. And last year, we pivoted to a digital bank for digital assets called Main Wallet. So it's a short summary. So to make story short, so initially we wanted to be the same play as Polymath guys and like some others, Securitize. But we came to the conclusion that the regulation is not enough to make this company successful. So we decided to concentrate on the payments itself and validation of the payments on blockchain. So, so instead of like trying to sell security tokens, we basically want to work with the financial institutions for them to buy. So in this play, central banks are the main drivers. So right now there is a big trend of central banks introducing their currencies in many countries, like including China, Canada, Singapore, UK, France, and many others. So we are working on the three types of assets: loyalty, currency, and assets, and concentrate on the tokenized form. So right now we are bringing innovations that we did in cryptocurrency to our traditional non-crypto assets. So this is like a high picture overview of our infrastructure. So we have assets on the we centralized custody, and the center our ledger is for operations on Cosmos, and the custody is centralized, and we have APIs toward messengers and mobiles and toward different applications in payments and capital markets. So we already got a good traction in crypto. So in cryptocurrencies on Telegram, we have around 100,000 users, 8 million operations, 80 million operations, and we generate revenue there. Our clients are coins that need banks, basically. They need banking services for their users. This is kind of mechanics that we support. It's mostly gamification mechanics. And also we right now establish relationship with MasterCard, so we can do issuance and from crypto toward MasterCard in Hong Kong. And we also do crypto fiat. We also can open bank accounts for small businesses in the US in Bank in North Carolina, Live. We are working through compliance provider called Finclusive. This is example like of some services what to do. So this is related to coronavirus, COVID. This is the campaign we are launching right now on Twitter for charities and to basically invoice people through Twitter, through direct messengers, when the people just to place me too, and we automatically see this retweet of celebrities and we invoice them. So already signed up to charities for that, and we're gonna do broad outreach soon. The two charities we signed up, it's funny, but one of them is basically Binance blockchain charity, and another one is charity that support companies who fight cyber criminals. So it's criminals, cyber criminals, and crypto, two clients. And so this thing is patented. We hope that there will be a lot of demand, non-profits, and basically help, by the way, to monetize Twitter a little bit. So this is the model for Main Wallet. It's kind of App Store model, B2B2C, how we make money. And a major competitor, so we compare ourselves to Bakkt in the United States, to Signum in Singapore, similar to a little bit to Tone when this will be launched, a little bit similar to Binance fixed wallets. The difference we're a centralized custodian, and we support group mechanics, a lot of flexibilities. So so it's compliance map. I will not go through that, but basically we know the difference when the loyalty points like should be regulated or not, when this money transfer license is required. We basically work with these guys, and that's why we are ready to be regulated. This is the capital part of the business, the pilot that we did in Japan with Oryx Group. And basically, I will go directly to the comparison in the capital markets. So in capital markets, as I said, we don't believe in the model that the guys like Securitize is doing, or Harbor, which was acquired. We are more like believe in the model what Figure is doing. And Figure is, it's my classmates, by the way, from Stanford Business School, the same year in executive MBAs. They built SoFi, and now they're building Figure. It's using Hyperledger fork called Provenance to validate and to automate warehouse refinancing of HELOCs, home equity line of credits. So they secured $1 billion warehouse facility, and they basically raised $250 million. So this thing really works in the United States right now, and we want to implement main wallet for the same use case. And I'm in touch with several banks right now, like CCC in China and Credit Suisse in New York, regarding the interests of building consortium syndicate for underwriting. We were part of the Franklin Templeton Accelerator recently here in the Bay Area. Okay. So our ask right now, we are raising $4 million pre-series A. This is needed in order to make this US implementation happen, and to have like traction in non-crypto world, basically, driven by enterprises. So and then within 6 to 12 months, we're gonna do a Series A between 10 and 20. Okay, thanks a lot for your time. So please.
All right, thank you. Judges.
Okay, I can take a lead since I think myself already an investors into your projects. So I actually participated your ICOs in 2017, I think. So I think from the deck you mentioned you raised 18 millions from that time. So this question is actually for my personal curiosity is actually that's a large number of quite a lot of funds. So how do you actually utilize this fund to make distribute this fund into your projects? And because your currently direction is in an area which has very rigid requirement for compliance, and it is also capital intensive. So what's your plan when you finish the fundraising for this round? So what kind of like a major problem you are trying to solve, like the major challenge you've met in this project?
This is our lesson slide. Basically, we utilize those funds like building. We made a big attempt to build a new protocol for securitization, new asset classes. And the major asset was movies. So we invested $5 million in movie production, in joint venture in Hollywood. And this company, it took longer than we expected because regulator didn't it's just supported because of the coronavirus. They changed the laws, and right now it's much more better. So the company in movie production particularly, they already closed the first movie fund. So they spin off and they close the first movie fund. They already validating the whole thing. The money that we are raising right now, as I said, we pivoted to digital asset banking play into last year, and right now it's completely newly built from scratch. The company incorporated in March here in the United States. The only thing that is moved from the old story, it's a brand, BankX. So basically, we pivoted significantly, and we are building a banking for digital assets. The first thing, it's mostly not crypto. So crypto will be there, but the goal is to connect this through the traditional custodians to the traditional banks that we're already doing, and to traditional payment system, and get financial institution use this as a digital bank, as a kind of continuation of their traditional path. So with more digital assets coming, they will need this, otherwise they will go out of the business. So they need traditional bank and digital asset bank. So this the coronavirus helps because like the digital bill was adopted in the United States. The people stopped to talk all the scams, all that. So the people really kind of started to appreciate this thing. They see that central banks really follow this, and this becomes like a public knowledge, not just few people from the industry. And so I believe the central banks will push it, and after that, all the commercial banks will follow. So it's happening right now. We are participating in RFP from Bank of France for preparing like digital currency proposal infrastructure for them. So it's coming.
All right, guys, we're going to move into feedback. So the rest of you judges who had questions, please include it with your feedback. Anyone? Lee.
My question, I'll defer to David, but because he may have more specifics. But my curiosity is about the COVID piece and how this is to integrate with nonprofit campaigns. It seems like you're trying to work within the viral nature of certain Twitter campaigns to get at least attention. How do you get the money to layer into that as well? Is this like charities where you can text somebody to donate, or does it tie in a different way?
Yeah, so the flow works in this way that celebrities and influencers, they help charities to promote. So when they text about the particular charity, when they text and they want to support, like here it's kind of DiCaprio, yes, texting, like for instance. Then the charities can basically the users follow their charity, and then they just reply to DiCaprio a tweet with one retweet, like me too, yeah. And then they got invoice on direct message, and it brings them to their invoice page, which right now we generate through Stripe. And after they get paid, they got instantly a message on their direct message that it's paid, and then they got also instant retweet, repost on Twitter. So the Twitter is basically become a ledger. It's like a social ledger for people for these payments. So this is like a great thing because it's responsible donation, and also it's a recognition, and also it's validation. So it makes a lot of sense to do this on Twitter.
Thank you.
Okay, I have a quick feedback. I see so many startup pitch all the time, and I believe you have different version of pitch deck, right? Like I love your detail and so much information. I want to like read everything, but for the pitch purpose, maybe you could summarize more in each page. That is my quick feedback.
Yeah. Yeah, I agree. Just finished, by the way. I was recently in touch with Lee. I was in touch with Ben from Hong Kong, from Hashkey. So
okay.
Yeah, so Ben gave me some feedback on my pitch. So I basically make it more consistent. So he recommended to talk to you, basically, to talk here in ES to people in Bay Area.
Sure.
Yeah.
So when you are sending and when you are presenting might be different deck. That's my suggestion.
Yeah. Well, it's too intense for me, so I was not enough time to prepare another deck. Sorry.
Did you go to school with Ben?
Yeah, I was in Stanford Business School, graduated 2011. We have like a big generation of fintech people there. I was the same classmate like with the guy who ran Nubank right now in Brazil. I was in Moscow, the same classmate with the guy who ran Revolut in the UK right now, Nick Staronsky. So I know like many like billionaires in this space. And
you're trying to catch up, I understand. So listen, where's the bank chartered?
The bank, you mean the bank that we're working with?
Yeah.
It's North Carolina.
North Carolina.
Yeah, called Live Oak. Yeah, so we are a neobank. Between us, there is compliance provider called Inclusive, which is bank like a compliance as a service, and they connected to 4 credit unions. So through them, we can open account. It calls FBO, for beneficial owner accounts, for nonprofits or for businesses within North Carolina Bank.
So you're using what I was wondering is, so you're using a compilation of existing services. You're like a layer on top. So you're marketing a brand.
It's well-added services because everybody has their business. So these guys, they're keeping accounts. Inclusive, they're making KYC and anti-money laundering and compliance. And we can do basically, so integration with social networks, we can do audit on top of that, so we can do pure digital assets.
Got it. Okay, thank you.
Thank you.
Awesome. Okay, so we are out of time again. We will move on to our next startup. Thank you so much. So next we've got B, and I have already promoted you to panelist. So please share your screen whenever you're ready.
All right, I'm getting that going. Thank you. And present and share. There we go. And okay, are you seeing it?
Yep.
All right, so I will keep this, let's see, as quick as I can. This presentation was not tailored for this audience, so it might be a little too high level, but I'm going to run with it. I'm going to spend about a minute on introduction and POC, which is the umbrella for all the 3 ecosystem platforms I'll talk about, and then I'll spend a minute each on those 3. So I'm B, and I am not seeing my notes, but my background is in engineering and strategy.
Do you want to, if you're not seeing your notes, did you want to maybe see it on your phone, or I don't know if that would help. I just don't want to keep you or leave you stranded. Are you okay with this?
Oh, I can see them now.
Okay.
Got it. Thank you.
All right.
Okay, cool. All right. I appreciate that. So I will sit there. All right. So let's see here. Got it. So my background is in engineering and also business strategy, operations, security. I've been working since the 90s. I've had a lot of time to work in digital agencies and all that fun stuff, which is all reflected in the origin of POC. This outline here to dive in, effectively POC is a brand new team. We were formed last month. We are 10 right now and hiring. We're post-revenue, and the bulk of this presentation is going to be centered on the consumer platforms, but everything else you see here is just for context for the fast readers. Everything we do is informed by and is teaching a collaborative DEI learning framework and model. DEI here is diversity, equity, inclusion. Our principal thesis relates to human bias and the confluence of the impacts of that bias at scale, as reflected in what we're learning about, our response to COVID-19 and how we got here. So that's been going on for a really long time, and so what I'm about to present in these platforms has been a long time coming. All right, moving on to the platforms. Let's see, focus, there we go. So there are, oh, wow, well that was funny. I see it, it was processing them a little bit delayed. All right, so I'm moving these Zoom overlays out of the way. So the first platform here is called Fixes, and the essential tagline here for Fixes is that it's loan forgiveness as a service. The idea is that we have a lot of loans that are not with institutions, that are with family or friends or colleagues. Most of those are not in platforms where we can have an objective record of what the agreement was or who paid when, and sometimes they get forgotten, and a lot of times the loans outlive the original relationships. So part of the heart of this initiative is to make sure that we're prioritizing relationships and family and community over dollars and euros and yen, etc. So the way it works is that although there are some nice features like financial literacy built into the platform and training in that space, the thing that most people are interested in is the facility for a third-party loan payment. So we support having someone, stranger or otherwise, to pay part or all of a given borrower's loans. And the other, maybe less enticing part is that through our modeling, we're able to support basically a tie between a borrower's commitment to pay and their ability to pay. So that in case of hardship, they have little to no commitment to pay, and the lender still gets paid. Given the format, I'm not going to spend a lot of time talking about fixes, but maybe we can talk in the Q&A about where the blockchain fits in to that and in between these platforms. The next one is DEI LLC. Those of us who are familiar with American history, some of the less fun parts, might be familiar with the concept of the Green Book. The central idea is that it has not always and still isn't always safe for a lot of underrepresented folks to transact business, to get food, stay at places, and the Green Book was an early form of safe haven. It listed a number of different places, venues, businesses where underrepresented folks could more safely get service. So DEI.LLC applies a lot of our models learning about human bias and allows for people to, just like other platforms you might be aware of, go and search or browse for services, food, housing, whatever the case might be, and have access to people's feedback, consumer feedback about past experiences with that DEI lens, that diversity, equity, inclusion lens. For better or for worse, get to see all of that as a first order entity in this platform. And then our platform translates that into 3 key areas. It translates it into 1, the ordering or ranking of results for browsing and searching. 2, the filtering of results, because in some cases it doesn't make sense to show certain results based on the data. And then 3, and this is one of the principal innovations, there's a price index that we generate, so based off of people's experiences and the hiring practices and DEI dimensions of, how people are treated and paid and, normalized by location and service type, et cetera. And then ownership and investment and, the environmental and social impacts of those choices. We inform what we're calling a price index that allows us to translate a menu price or a product price into an impact price, a total impact price. So the one example I'll give for this, because time constraints, a lot of people might choose, hey, I'll go to Sam's Club rather than Costco because it's closer and I'll save 50 cents. And the product is probably, maybe 20 cents less or $1 less for the items that I'm looking at, for this particular item. But then that same person might then look at our impact price and see, well, by virtue of what's going on with, say, we'll just say the Walton family, they're burning up the Amazon and, they're splitting up families. Well, we translate that into a number in the accounting practice that has often been called like an externality, that whole concept. We're part of the innovation here, and the value of the model is the ability to translate into numbers that people can understand in a meaningful way that can be drilled down into and for which we can be accountable. There's a lot of insurance and underwriting that's gone into our preparation for this. So that said, the impact price might be plus $2 on the Sam's Club side, and then on the Costco side, where Costco, hey, they're treating their employees well, for their locations and type of work. Well, that might drop their effective price down to 50 cents. So the spread ends up being maybe about $2.50 in the opposite direction. And it makes it easy for someone who's not an expert in all these different fields to just do what they might do otherwise and just, go with whatever price is cheaper for the quality that they're looking for. And have with the understanding that the impact price is rooted in actual impact for, the consumers and everybody else. So that said, very quickly, I'm going to go through MATE, which is the biggest one. And so this whole event is a lot of practice for me. So MATE, okay.
I'm so sorry to interrupt you. I mean, I will give you about 10 more seconds, but we are way over. So
thank you.
Sorry. Yeah.
Yeah, got it. All right. MATE is a social matching platform. There are 3 features. One is a parachute that, automatically calls a lift in case you need to get out of your event or a date. And there is also for parachute, venue owners can participate. So that's, you know, if you are a landlord or a bartender, et cetera, it's going to be a perk on the DEI.LLC platform for you to stand up for, you know, people's safety by participating in that and by facilitating people's safe, you know, exit and separate exit from your venue as needed, and the training that goes into de-escalation. There's teletherapy built into the platform. That's all I'm going to say for time.
Okay, do you want to go to your last page? Last slide.
Thanks.
Just
Thank
to,
you.
yeah.
Thanks. Okay. Yeah. Wow. Let me just go there. I might as well just go there. All right. So,
Okay.
questions?
Awesome. Yeah. Judges, questions?
Yeah, I actually have a question because I'm kind of confused. So this is so why do you choose to get into this 3-platform system? Because to me, maybe DEI and MIAD, they kind of can share some kind of resources, or maybe targeting same group of people. But the fix to me in a peer-to-peer like lending area, it's really a DeFi thing. So why do you choose these 3 separate systems, and what's the similarity or synergy you are looking to create? You know.
Yeah. No, thanks for that question. So the natural model that comes to mind is lichen, L-I-C-H-E-N. In recent studies, we've determined that it's a complex, not just of, say, like fungus and another life form, but they're actually, I think, bacteria. They're basically 3 types of life forms that are part of what for centuries has been seen as like a single organism. And in this case, this ecosystem has a lot of synergies, not just from an engineering standpoint and from a core team resources standpoint, but also business synergies that the time format doesn't necessarily leave a lot of time to get into, but are relevant, 1, for the blockchain question, and 2, for the revenue question. So for example, I started to mention that there's actually a fintech aspect of the Mate platform. There's an escrow feature. We talked earlier about the ways that people lie when it comes to, say, career history and so forth. Well, people lie also when, you know, in networking and in dating and in relationships. And so each of the features, the major features in Mate, is a way to provide data-driven basis for Mate as a third party in conjunction with its partners to provide a match that's based on, you know, defensible information. So one of those is sexual health testing, which is optional and not associated with any of the profiles, and, you know, but does impact matching because the platform's core is about harm reduction. And the other part is the escrow that I mentioned before. So the escrow feature allows you to say, hey, you want to go to, if you want to, you can associate a given experience for your meetup or date. You can say, hey, I really want to go maybe on the 3rd meetup. I want to go to this Ethiopian restaurant, this fancy one. Well, you can put $200 in escrow, and that is your way of communicating to other folks that are also interested in that kind of experience that you're serious about it and that you're going to show up, basically. And that whether you saved up for it or you just took it off the top of your latest disbursement, that, you know, you're real. And on that basis, our matching algorithm can prioritize based on other folks' interests and so on. But those kinds of synergies, like times 50, are part of the answer to your question. Oh, sorry. Let me just add that.
Yeah. We're like really out of time.
Oh, okay.
Guys, we have to move to feedback.
Okay.
Judges, if you have questions, please roll it into your feedback.
Yeah, this is David. I love the overall idea, of course. I mean, how could I not like diversity, equity, inclusion? But this seems like, and I like I get it's one ecosystem. You can imagine that an investor would be like, wow, what am I investing in? Mm-hmm. Where would you as the entrepreneur put most of your energy in when it looks like 3 disparate businesses?
Yeah, no, thank you for that. So one of the things about my background I didn't get into given the format is that I have IP relating to rapid prototyping. And all of the engineering processes surrounding a concept that, well, my previous employer, New Context, is more familiar with, or more publicly associated with, called lean security. The basic idea is that you don't hold off security until the very end. So we're integrating security and basically SOC 2 compliance and then some on our way out to our public offering. We're not waiting. And so all of that training, all of that familiarity in the security world and the information management world, including those concepts that have been mentioned before about self-sovereign identity. And there's actually a platform that connects these services that relates to distributed identity. And
did you build your own protocol? What is this built on?
Okay, so for the MVP, we're reusing a lot of existing pieces while we're in parallel developing some IP that's new. And one of the deepest pieces of IP is the model itself, the DEI, the collaborative DEI learning framework and model, whatever that means. So the idea is that we don't have time for it, but I'm glad to talk about it offline.
Mm-hmm. So, okay, so bottom line is I think there's got to be some way for you to get to a point where you are showing, I guess maybe there needs to be more of a discussion on the front end, even 100,000 foot, 10,000 feet above this, what you're, because you said this is, you know, I don't know, it wasn't do no harm, but it was.
Oh, harm reduction. All right, yeah.
Harm reduction is not discussed here, like that you can go the 3 platforms ecosystem of harm reduction.
Oh, all of this is about harm reduction.
So my point is then that behind you, I'm seeing the sheet or this page, and it says, you know, 3 platforms ecosystem of harm. Then it's like, oh, okay, so here's this entrepreneur's attempt at harm reduction. It all does integrate. It does make sense. But are you hiring teams to be able to build out each one of those 3? I mean, social matching and loan forgiveness is just completely.
Oh, they were already principally built before we incorporated. And they share a lot of core components that can be easily separated.
So the technology is shared, but I'm saying who's going to be the front-facing navigators or managing each business?
Yes, so oh, sorry.
And so all I'm saying is that causes, as an investor in general, pause, because it looks like the classic response is, oh, this person is not focused enough, or this entrepreneur isn't focused enough, so they're not going to be able to execute. It's all great, but they need to drill down on one as opposed to the others. I assume there's a rollout. Your answer is there's a rollout, and you'll start with one, build that out, and then when it makes sense, build the second one and all that.
There are a lot of overlaps also in the partnerships and the APIs and the processes, the internal processes that support these. But yes, we spin up partners. The rollout approach is that we spin up partners like customer support and so forth as needed. And we're using a lot of SOC 2 compliant, basically API linked service providers so that we can scale on an as needed basis. Our whole approach from infrastructure to business operations is just in time, scalable operations and information management. We don't want to even know the government names of the people on our platform. And we encourage, there's training that's part of the consumer aspect of each platform to encourage people to take their data privacy choices and consent very seriously on our platform and others. But glad to talk about it offline.
All right, and this is where I will step in. Sorry, we are running really late, and we're running late to our own event. That's what's happening right now. So we have one, yeah, exactly, it's a problem. So everyone's kind of waiting for me to show up, and I'm not there. So I'm so sorry. But really quickly, I will let the final company do his pitch. So Daniel.
There's another company?
Yes, there is actually one more who we had difficulty communicating with, but we do have all the information. We'll send that to the judges afterwards, okay? Yeah.
Just, hello everybody, my name is Daniel Uribe. I know we are running out of time, so I'll do it really, really fast.
Yeah, and I sorry to interrupt you there. Share your screen again. I had to stop you to, yeah, okay, thank you.
Okay, so I'll just take the 3-minute pitch. This is very, very short. Thank you for staying this long. So my name is Daniel Uribe. I am the CEO and co-founder of Genobank.io. And basically, we are a privacy preserving test kit, especially or specialized in DNA, but we are already calling it the lab data wallet based on blockchain. So let me just move forward. So as you may know, this year on January, 23andMe just had to lay off 100 employees. And it's basically, or they were explaining that the case is attached to privacy preserving concerns about the users. So we have a solution. So we've been working almost 2 years now on this solution because my son was diagnosed with a DNA mutation. So I am a parent and a cybersecurity expert, very, very concerned about this. And of course, not to mention the COVID-19 pandemic just reinforced the need to privacy preserving products. So this is our current product, is literally a saliva DNA extraction kit paired with a blockchain-based data wallet. Our main differentiator is that we are the first and only company that is proposing the use of NFTs to register exclusive genomic variants as a DNA fingerprint. And we allow our users to register those exclusive variants of our DNA in a public blockchain. So we are like the initiators or the ones who are trying to propose the bio NFTs, right? So our technology is ready to integrate with the labs APIs and of course a Jupyter notebook, so you can analyze the data with, of course, the consent of people, and the consent is done, of course, by sharing your NFT. It's very important for us to say that users never loses ownership of these NFTs. They only share it. They just share it for a specific amount of time. Of course, it's applicable for any biospecimen that could have human DNA that is traceable. So even if it's a COVID-19 lab test, we can extract enough DNA information from the patient to, again, compare to the NFT and say that that person is who it is without privacy concernings, because this is all of this is done anonymously. So this is how it works. I won't be here, but it's literally sharing biodata in a peer-to-peer mode using bio NFTs. I will share this presentation with everyone so we can discuss that later. So this is the founding team. It's just my co-founder and I. We're cybersecurity experts, bioinformatics, full stack and blockchain core developers. My advisors in biobanking are professors from the University of Sydney, and we have others from University of Stanford. Just 3 exciting news. We just received the 3rd prize of the British Blockchain Association because we have I believe, a cool abstract, which is privacy loves genomics and NFTs. How can these be combined? We just received last week a grant from Block One to help develop an anonymous COVID-19 test kit or a privacy preserving. We're currently crowdfunding on Republic. So far yesterday, we're 308,000. Today, we're almost 310. So if you want to visit our online pitch at republic.co/genobank, there's a typo, it's -io. And that's it. That's our 3-4 minute pitch. If you want to please get in touch with me, please feel free. Thank you very much.
All right, thank you. Okay, so judges, I'm going to have to ask you to roll your questions and feedback into a 4-minute session.
I'm going to go first and just say that I was one of the judges when they won the 3rd place in Scotland. So I've given Daniel my feedback. It's an excellent approach, which is warranted. So I'll leave it to the other judges.
Thank you very much, Sean. It's good to see you again. Thank you.
Nice.
So my question's feedback is I don't think you've touched this point about how are you going to make use of those data and in a privacy way that is actually you know, kind of think about your business models.
Yes, of course. For the lack of time, I would be more than happy to speak that offline. But there's I believe an explanation for those questions. Yes, you're right. Thank you very much.
David, if you're talking, we can't hear you. I think you're muted.
I'm not really, I don't really have any questions or comments at this time. I just want to get, it's kind of rushed for me. So, and if you could send around everyone's deck, I'd appreciate it.
My fault. Okay. Yeah, that sounds great. So did anyone else have a question? I think maybe anyone from the audience.
I mean, I can ask a quick question of just what has changed in the past couple of months since we last spoke, given the interest in, you know, genetics, especially with regard to some of the testing that's going on now. Have you found any type of pivot internally or attention from where you didn't expect it?
No, Sean, we're in the same track. We just kind of got interested in the qPCR testing, which is also an RNA kind of presence test. But still having used the QR code kind of thing or wallet to present the results to each individual. So instead of a DNA, it's an RNA test, but it's the same infrastructure, same architecture.
Okay. We still actually do have a little bit more time. I'll give it about 30 seconds if anyone wants to, you know, ask a question or provide feedback. And again, I apologize.
No, it's all right. I mean, it's been a rich couple of 2.5 hours, so it's not bad. So it's okay. I just don't want to just spit something out there. I think it's very intriguing. I've seen a ton of different COVID responses and tests out there from around the world. So I'd like to at least look at the slides before I ask some questions. So, Daniel, where are you based, Daniel?
We're based in Palo Alto. We were based in San Francisco, but we had to move.
Okay. So yeah. I saw Stanford in there as well. So we have a bunch of Stanford refugees running around here. So that's okay. So we're used to you guys.
Thank you very much.
That's it from me. No comments on it.
Okay, well, I see a comment from Thomas. I wasn't actually quite sure if this is for Daniel. He says, didn't quite see an NFC. Was that a QR code sensor?
Yeah, that's slightly confusion because I am talking about non-fungible tokens, not the near field communication kind of thing. Although we are, of course, testing some NFC cards to store the wallets, just to ease people not to create a wallet and be, you know, mindful about their private key and everything. But so there's two different concepts. So we propose using non-fungible tokens to represent DNA data, like exclusive variants from each of the participants. And the other is like the near field communication technology to keep the private key in a card. So that's two different things. But of course, we can talk later about this in more depth. Sorry.
Yeah. So actually, panelists, sorry, not the panelists, the startup pitchers. If you guys want to share your contact information to the rest of the attendees, you know, through chat before I end the meeting, because then it's lost forever. Please go ahead and do it now. I'll give you about 10 seconds.
Thank you everyone for coming.
Yeah, thank you so much to all of you guys for sticking it through and for being there and joining us on this lively conversation today.
Thank you.
Thank you. Bye-bye.
Yeah. Okay. Okay, so 10, 9, 8, 7, 5, 4, 3, 2, 1. All right, everyone, that concludes our event. Have a great rest of your day and rest of your week. Thanks, guys.
Thank you.
Yep.
Bye-bye.
Bye.